Hi, this is Andy Hoffman of CryptoGoldCentral.com, which publishes a daily cryptocurrency blog and provides professional crypto consultation to individuals and altcoin developers alike. This week, we have a very special guest, as not only is he anecdotally one of the most well-known, influential people in the crypto community, but was quantified as such in separate surveys, ranking him 2017's number 10 and number 11 most influential person in crypto. To that end, he not only operates his own crypto hedge fund, On-Chain Capital, but is the host of the world's first crypto television show, Crypto Trader, Thursday nights on CNBC Africa. He's been a major player in the crypto world since 2013 and a highly successful entrepreneur in his home of South Africa. Not to mention the only CFA, aside from myself, publicly commentating on the crypto space. That man is Ran Neuner, i.e. at CryptoManRan, who I am thrilled to have as a guest this morning. Welcome, Ran, to One on One.
Thanks, Andy. Thanks for having me, man.
This is going to be awesome. Now, most people know Ran principally from his TV show and Twitter feed as someone who is infectiously bullish about crypto, a strong believer in altcoins, and as hardworking as anyone in the space. However, what they don't know is how well known and successful he was before he viewed crypto as the next great thing and did something about it by becoming one of the most influential people in the space. To that end, Ran, please tell us a bit about your educational and business background, what made you see the light about crypto, and how so quickly you became a leader in the crypto sector.
So yeah, let's go back to my education. I'm not academically very smart. It took me, I think, 5 or 6 years to get my undergraduate degree. When I finished my undergraduate degree, I never actually went to university or studied. I did everything remotely because I was too interested in running businesses. And right through my university career, I had businesses. When I finished my undergrad, I did a CFA, I think, which is what you did. So we both have CFAs. And having sold a few businesses, I decided that because I've got a CFA, what I need to do is I need to become a stockbroker. Because you're a CFA and you need to get into the markets. So I became a stockbroker. It was the first time ever that I got a job, and that job lasted all of 4 months before I was called into HR's office and told politely that I need to leave.
Did you do something wrong, or you just hated the job?
No, I did a lot wrong. I went into a very conservative banking environment, and I was this gung-ho entrepreneur who wanted to take over the world. And amongst the things that I did wrong was I tried to buy the firm. I tried to get an offer to present to the owners of the firm. And people didn't like that here comes this 22, 23, 24-year-old guy, and he puts in an offer to buy an 80-year-old firm or something crazy like that. Long story short, what I realized back in the day, now you got to remember this is 1998, I realized that you don't actually need a stockbroker because you can do everything yourself. You can check the prices yourself, and theoretically, you could actually execute the trade yourself. So I raised a couple of $1 million to start what was then one of the first online stockbroking portals in the world. I mean, we raised the capital before Charles launched, and while we were developing our platform, Charles Schwab and E-Trade launched. And we developed our platform until about 2001. And in 2001, when we were ready for launch, we needed to raise another round of equity to get the product off the ground. We'd raised a couple of $1 million before to build the product, but now we needed to raise a round 2 to actually launch the product. And anyone who was around in 2001 will remember that that was a time when the internet bubble went bang. And so we couldn't raise another round of finance. And so with the internet bubble going bang, the company went bang, and I tried to keep the company alive using my own money, but my own money only went a certain distance. And bottom line is, by the beginning of 2001, I was broke and insolvent. And I went to bed every night hoping that my creditors wouldn't actually take me to court, which they didn't because there were no assets to actually be able to claim. So even if they were successful in court, I had no assets. I'd mortgaged my house, I'd mortgaged my car. And when I went bang, which was a very humbling experience, I ended up moving back to live at my parents' house. I had to remortgage the car. I was driving a mortgaged car, and I had nothing to do. And this lasted for about 6 or 7 months before I started a little marketing company just to pay the bills. It was a marketing company which focused on placing people at events and in stores to do sampling activities. Anyway, to cut a long story short, I built that business in 2001, from 2001 to about 2015. And I sold that business in 2015. And when I sold that business, it was the biggest marketing and sales company in Africa. It was bought by a company called Publicis, the Publicis Group. It was bought for around $150 million. It's a very public transaction. It's all over Google, and it's if you just Google my name and Google Publicis, you'll see the acquisition. And my plan was to sell the business and retire. That was really all I wanted to do. And one of the last projects which our business did while I was still involved was a project called M-Pesa. And now, for those who don't know, M-Pesa is a peer-to-peer money transfer that happens over a mobile phone, and it's quite successful in several African countries, including Kenya, which is to the north of our borders. And when I discovered Bitcoin, what I realized was that actually Bitcoin was a decentralized M-Pesa. And so instead of being fully retired, what I started to do was I started to research what Bitcoin was about. And that dragged me down the rabbit hole. And here we are today. I'm very far from retirement. In fact, I'm probably having more fun than I've ever had, but working much harder than I've ever worked.
Yeah, well, it's funny because my career path started on Wall Street. It started very well on Wall Street until, of course, you had the bubble that crashed. And then I discovered precious metals, and I was in precious metals for 15 years. And, you know, there were a few highlights, but for the most part, it was misery. So in your case, you were kind of at what looked like the end of a successful career when you found Bitcoin. With me, it saved me and created a new one. So we're both here right now, and both doing well. And obviously, you know, you couldn't be more well known in the space, and I have a feeling that you can be a lot more well known in the coming years. Now, next, we're going to dive deep into the space, starting with the current issues affecting it most. Clearly, the Bitcoin consolidation of 2018 isn't over. With strong support at the Hoffman line, i.e. the $100 billion market cap level, where institutions entered the market last year, and resistance from the remaining selling pressures from last winter's bubble, which continue to be fostered by relentless but ultimately immaterial FUD. As for altcoins, some have fared better than others, but many have not yet showed concrete signs of bottoming, despite Bitcoin market cap dominance having only risen to 54%. Ran, before we explore market sectors more deeply, tell us where you believe the cryptocurrency market cycle stands in terms of both Bitcoin and altcoins. What issues do you consider material obstacles preventing a new bull market leg? And if none exist, why is the sector having so much trouble lifting off?
Okay, so I think to answer that, let's have a little bit of a look backwards. Let's go back to last year, January, when the market capitalization was, to the best of my recollection, about $13 billion. And if I remember correctly, Bitcoin was more or less, I can't remember, I think it was about $1,000 or somewhere along the lines. I can't remember exactly the numbers.
Yeah, January 2017, we started at 950. We hit 1,000 the first day of January, and that's where we started.
Yeah, so I think let's look at let's sober up and kind of look back at where we were. That's where we were. We had a crazy retail investor excitement cycle where people jumped in, and there was a frenzy. We had a frenzy cycle which took us up to an absolutely unrealistic number of Bitcoin trading at 20,000. But not that. The scariest part was that this new wave of altcoins built themselves a huge market cap, which was absolutely unjustifiable. Now, there are good things and bad things in what happened. The good thing about what happened is we drew a lot of attention into this industry, attention which would never have come had we not had that bubble. So if you go to the average man in the street and even the average fund investor, none of them would ever have paid attention to Bitcoin if Bitcoin had continued to trade at around the $1,000 range. The only reason why there's so much interest in this space is because people have seen that Bitcoin can be at 20,000 and very quickly, and that the market can go close to a $1 trillion valuation. That's the only reason why anybody has any type of interest in the space. By the way, when they got the interest in the space, they realized the magic of this technology, and now we've got a whole lot of interest from technology players, developers, etc., who want to build amazing things on the blockchain and solve some of the world's problems using the blockchain. And then we've got a whole lot of institutions and investors who now want to come in and invest. Then we have the sobering up, which is, the bigger the party, the bigger the hangover, and then you need to start sobering up, and that's exactly what's happening today. Now, I think it's futile to try and call price predictions, and I think it's probably almost as futile to try and call tops and bottoms. And so my view in this space is a very simple view. Either you're a believer in the space or you're not a believer in the space. If you're a real believer in the space and you really believe in the financial freedom that Bitcoin gives, and you really believe in all the problems that the blockchain can solve, then you've got to look at sectors that you think are going to be disrupted by the blockchain, decide how quickly they're going to get disrupted, look at the technology that's out there and decide whether that technology can actually disrupt. And if yes, then make your investments. So in that spirit, I recently tweeted, and the tweet went quite viral. I said I bought Bitcoin for my parents at about $6,500 US. Now, did I buy at the bottom? Who knows? Who cares? The truth is, if I was buying it to trade it in a 1 year time horizon, then yes, I should probably maybe watch the market closer and try and pick a bottom. But that's not the game that I'm playing here. I fundamentally believe in this new financial revolution, and as such, for me, buying Bitcoin at 6,500 felt like a reasonable entry point. Will I buy alts? Yes, very, 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 very selectively, for a few reasons. One is we haven't been able as an industry to prove the utility of a utility token. The utility token is still in proof of concept phase. And the way I see it, nobody has been able to prove a utility token really has utility and therefore a whole lot of value. So if you're going to put your money into a utility token, you need to know that you're entering not only the riskiest investment space in the world today, which is probably cryptocurrency, but you're also entering the riskiest part of the risky category of cryptocurrencies, which is actually the utility token. Am I happy to invest in things like Monero, Zcash, Litecoin, Bitcoin, and maybe even Ethereum in terms of protocol plays? Yes, I'm investing in those, and I think at these levels we may go a little bit further down, but hell, I'm buying.
Right, and you mentioned that it was for all the people that get excited about ETFs and institutions, which we'll get to in a second. All of what happened last year in 2017 was, as you say, retail. There were no institutions. In fact, I talk about the Hoffman line because we're both, from the financial industry. $100 billion is kind of a round number that they look at. It makes it a real asset class. And I was saying that once we got to that level, which is about 6,000, that's where institutions come in. And not only did they come in, but they've held that level throughout this entire bear market. And it's looking stronger every day. So we're going to talk about institutions in a second, because the next wave will include those retail investors who will come back, plus the institutions. And also, as you say, there's two aspects of the interest. Most of the people in the sector, probably most of the people listening to this show, are focused primarily about the price. They want to become wealthy. Yes, they may believe in the future, in the freedom that Bitcoin believes, but for the most part, it's an investment. And some people have been wildly successful at it, and some people bought at the top and they are, hoping to get their money back. But there are two aspects, as you say. One is the investing aspect, and one is the people coming in and going, oh my God, this is the most amazing technology ever. We both retweeted that tweet last night that someone moved $194 million of Bitcoin yesterday for 10 cents. You saw that?
Yes.
Yeah.
I think the problem in this game is that the investment and the speculation is overshadowing at the moment the effects that the technology may have on society and humanity. And I think a lot of the viewers, and from my show and probably from your show, are based in first world countries countries like the USA and the UK, etc., etc. But hey, I live in Africa, and I know the issues of a currency that is not stable. I mean, in the UK, when the British pound moves up or down by 1% against the US dollars, that makes news headlines. Our currency has moved 20% in the last 2 weeks, and that probably hasn't even made headlines.
Yeah, I remember I was in South Africa 10 years ago. The rand was 6 to the dollar, and now it's 14, and the rand isn't even one of the bigger problem currencies in Africa, relatively.
Exactly. So, and for us, there's no such thing as financial freedom. I'll give you another example. We have very stringent foreign exchange controls, as does India and I think China. We're not allowed to take our money out the country. So, I mean, essentially, if you make money in South Africa, your money is tied up here in the South African currency, which is a South African rand, and you can't get your money out of here. You're not allowed to. It's the law. And so yes, I get the investment use case for Bitcoin, and I really hope that people make a lot of money, and certainly I'm going to try and make some money out of it. But let's not let that overshadow what the technology can do. And let's talk about another use case for the technology. I'm working with a project. Rwanda is a country north of the borders here, and Rwanda is a big producer of things like coffee and tea. Now, the problem with Rwanda is a country that has a lot of hills. They call it land of 1,000 problems, land of 1,000 hills. And it's very hard for insurance companies and for farming companies and for futures companies to get good information about the weather, about the humidity, about rainfall, etc., etc. But now, using blockchain and specifically the ability to transfer currency automatically to people who upload information, they can get that information from the farmers on the ground almost instantly. Now, that makes the world much more efficient, makes pricing of food much more efficient, but also empowers people who live in Africa to actually work and start earning money, which ordinarily they wouldn't have been able to do, purely because there was no way to transfer the money to them. Now, that makes a huge difference. Another big difference, and I don't know if you watched this insert that CNBC did when they came to visit me here in South Africa, but we have a lot of migrant workers that come from north of our borders, places like Zimbabwe. So when things got really bad in Zimbabwe, what happened was the Zimbabweans came to South Africa to try and make money and to try and avoid the big currency devaluation. The problem is they left their families in Zimbabwe. So what you'd have a father who would leave Zimbabwe, leave 5 kids and the mother in Zimbabwe, and come to South Africa to work. But he would have to send money back to Zimbabwe every month. And the only way to do it, well, because of these foreign exchange controls and whatever else, is what they called the bus driver method. And the bus driver method would go to the bus driver who drives from Johannesburg to Zimbabwe, give him the money, and get your family to meet him at the bus stop when he drops off the people. And he charges a hefty amount. He charges about 25% of the amount of money that you want to send. And very often, the money doesn't even get there and the bus driver disappears. And that's the reality of living in Africa. Now, if you can solve those problems without central bank intervention, because the central banks are part of the big problem here, then you've got yourself a revolution that, in my mind, is much bigger than Bitcoin going from $6,500 to $20,000. You've actually got a revolution that empowers people who haven't been able to be part of the financial function of society, and now they can be.
Right. And of course, piggybacking on this, there's so few people in this space that even consider the bigger issues of fiat currency in general, especially as you say, we're so, let's say, US centric or UK centric. They don't realize how many currencies aren't just being devalued individually, like say due to individual issues in South Africa or Zimbabwe. We're seeing an emerging market crisis right now. The Indian rupee is collapsing. The Chinese yuan is basically at the lowest end of its 25-year peg range that it's ever been. So I mean, there's a lot of people out there that are searching for stability. At the same time, there are people, like you say, who have real world cases that can be solved by cryptocurrency, particularly Bitcoin.
Now, Andy, I mean, it's great that you mentioned it, because if you think about the things that you've just mentioned, I mentioned the South African rand and the Zimbabwean dollar. You mentioned the Indian rupee and the Chinese yuan. Now, if you look at all those currencies, In fact, if you look at every currency that I know of in the world today, all currencies have one thing in common. And the one thing that they have in common is that they're all subject to political decisions. So every single currency in the world today will move up or down based on certain political decisions.
Mostly down.
Well, yeah, but sometimes up. So, I mean, if you look at the US dollar's had an amazing run since Donald Trump came in because of the stuff that he's doing. Regardless, I think my point here is a very simple point. We often refer to a stable coin as a coin which is pegged to a certain currency, be the currency the Great Britain pound, the euro, or the dollar. But I don't know if I would call those stable coins, because to me, a stable coin is a coin that is not subject to any type of political decision. In other words, no matter what political decision is made, the coin shouldn't move. That to me is what you call a stable coin, because most presidents in my mind are a little bit unstable, especially the little orange one that runs the United States. Those people are unstable. When they make decisions, currencies move up and down. Now, that's why when people talk to me about stable coins, I don't call those stable coins. I call those pegged coins. You want to know what a stable coin is for me? A stable coin for me is Bitcoin, because that is a coin that cannot be influenced by any political decision by any government. Maybe now it can, because we're still in the uptake part of it and the mass adoption part of it. But one day, when we have mass adoption of Bitcoin or whatever currency or cryptocurrency is successful in getting mass adoption, no government decision in the world will be able to move that cryptocurrency. And to me, that's what a real stable coin is. It's a coin that is not affected by any government decision.
Right. Well, of course, they are, quote, the first world currencies at least are, quote, stable against each other, but they're not stable against inflation. They're all being inflated, or in some cases hyperinflated. And that would include, quote, first world countries like Japan. And that's why they are all continually losing value in the same manner that most altcoins with unlimited supply are losing value. It's just a matter of time before they lose all their value, because that's how fiat currency works. So let's next move into the topic of institutions, which, as I've spoken ad nauseum about for the past year, clearly started entering the space when we reached the $100 billion market cap last fall. That's clearly why we had the altcoin bubble when all the crypto hedge funds came flying into the space in January like clockwork. And here we are a year later, still above that $100 billion market cap, with new announcements each day of all the new initiatives from institutions, starting with Bitcoin futures last December and those hedge funds. Now the growing push toward ETF approvals and the upcoming backed launch next month, they are clearly coming to the space. I mean, this week alone, it's amazing. Everyone's so focused on Tether. The Yale Endowment Fund, this is the second largest college endowment in the world, it said they're making a $400 million investment in a crypto hedge fund. We had Gary Cohn, who was the COO of Goldman Sachs from 2005 to 16 and spent the last 2 years as the top advisor in Trump's White House. He left the White House. Where did he go? A crypto startup fund. And then we had, of course, the backed exchanges starting next month. And then yesterday, we were both talking about this on Twitter, Fidelity announced the first ever major institutional custodial and clearing service for cryptocurrency. So, Ran, as someone who speaks regularly to the who's who of crypto high finance, what's your take on the growth of and outlook for institutional crypto investment?
So yeah, I mean, let's look at a few things there. The first thing is that this revolution is a very interesting revolution, and I was around for the internet or the .com revolution from the 1997 onwards. And there's two major differences between that revolution and this revolution. The first difference is that the internet revolution didn't have the internet to spark its growth. The blockchain revolution has the internet to assist with the communication. So we can expect this revolution to be much quicker. The second big difference between the internet revolution and the blockchain revolution is that the internet revolution never created any new investment instruments. So if you wanted to invest in an internet company or a .com company, you bought equity, which is the same instrument that you have been buying for forever. This latest revolution is a little bit different though, because the institutions need to get their head around buying a new type of instrument, which they don't know anything about. And it is a very, 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 very complicated instrument to use. You need to understand private keys. All of a sudden, you need to have this thing called a multi-sig wallet. You need to store it in a place that once it's stolen, you can't actually call someone and say, hey, it was stolen. Let me tear up the old share certificate and give you guys a new share certificate. So it's very complicated for institutions to actually come in the space. I think that yesterday's announcement by Fidelity was a massive, massive, massive turning point. In fact, for me, it was bigger than any other bit of news that we've had the entire year. And let me explain to you why. I have this thing which I call the pension fund manager test. Now, the pension fund manager test is when that pension fund manager stands up in front of his investment board and has to justify his investment decisions. Now, can you imagine that he would have got up in front of his investment board and said, I bought this digital utility token, which gives me no right to vote in the company. It gives me no right to the profit share. All it is it gives me access to the network, like the Ethereum gas token or the ETH token. And then someone puts up their hand in the investment committee and says to him, where did you store it before it got stolen? And he's got one of three options that he could have said. The first one is he says, I could have stored it on an exchange or a cold wallet myself, in which case he'd probably lose his job, right? The second option is that he says, I stored it at a digital custodian, and then someone else puts their hand up and says, which custodian? And he says something along the lines of Ledger or BitGo or Coinbase. Now, we are very familiar with those companies and love and trust those companies. I love what Coinbase is doing. I love what BitGo is one of my favorite companies in the space. But the reality is, for a layman, a pension fund manager, I don't know if he can boldly stand up in front of an investment committee and say, I put my money into BitGo.
Right, and Ledger isn't even a third party. That just means you're putting it in your wallet and saying, trust me,
Correct.
I got it. Yeah.
Correct.
Yeah.
But now a pension fund manager can stand up in front of the board and say, the asset was held by Fidelity. And that is what I think we've been waiting for a hell of a long time in the space. We've been waiting for a big name to come in and say, we're all in here. Here are the chips. And for me, Fidelity is the first substantial one to come online and say, hey, we've got a custody solution. Not to take away from any of the other custody solutions. Gemini have got a fantastic one. BitGo have got a fantastic one. But I don't know if a conservative pension fund, and I use pension fund because they're traditionally very conservative in their approach. I don't know if a traditional pension fund manager could have stood up hand on heart and held his head up high and said, I kept my money at any of those companies. But now at Fidelity, he can do that. Yeah,
absolutely. And of course, people forget about this backed exchange. It's a crypto exchange. I'm sure they're going to have custodial solutions as well, and they're backed by the New York Stock Exchange, the Intercontinental Exchange. These are big players. We've had JP Morgan, Goldman Sachs, and others talk about custodial solutions. I mean, Goldman Sachs bought Poloniex, so through their Circle venture capital fund. There's going to be solutions like that, and then of course there's the big pink elephant of the Bitcoin ETFs. I might as well ask you about that. I mean, I think that it doesn't matter if the government doesn't want it; they're going to have to do it at some point because someone else will do it first.
So I mean, let's look at something which we mentioned, and we'll talk about the ETF in a second. There, you spoke about Bakkt coming online. We spoke there's the amount of money that Coinbase has spent on building an infrastructure, and the same thing with Gemini, and there are hundreds of other businesses like that. Now, today, when I look at crypto, the market capitalization of all the listed tokens is about $200 billion. Now, subtract the shitcoins, and you can probably wipe out at $20–30 billion off that market valuation. The coins that are probably should be worth zero, you can wipe 20 to 30 billion off that valuation. So let's talk about a real market capitalization today of 150 to 170 billion. How much money is going in the background to build infrastructure around this crypto thing? How much money is Fidelity spending on their custodian solution? How much money is Coinbase spending on the systems? How much money is Caspian spending on building trading systems? Now, none of that is reflected in the current market cap because those assets aren't listed. So when people look at the crypto market and say, look, the crypto market is only a $200 billion market. No. The crypto market is well over $1 trillion today. If you take the valuation of Coinbase and you take the valuation of Binance, and I'm not talking about the token, I'm talking about the equity of the company, and you take the valuation of all these other exchanges, custodian providers, wallet companies, Ledger, Coolbit Wallet, etc., and you add all of those up, you'd be a fool to think that this is only a $200 billion market. This market today is well over $1 trillion.
And let me just add to that, because you talk about Coinbase. Again, there's so few financial players that are following the space. I mean, I see it on Twitter. It's like crickets. And they don't, I talked about the other day, Coinbase got a valuation round. I think it was somewhere around 10 billion. People don't realize that's a huge deal. Their last round was like 1 billion. And then, of course, there's this Bitmain IPO that's floating out there. Depending on market conditions, it could be $18 billion if they can convince people, yeah, all's well, their balance sheet, the Bcash, and they probably will. They have a huge mining hash rate. Someone is going to pay that money.
Yeah. So for me, when I look at the market capitalization, I think the crypto market is. There's obviously no way that you can put a number on it, but I think the crypto market today is very close to $1 trillion in terms of projects and market capitalization, and I think that that's only going to grow. Now, let's go back to your last question about the ETF. I speak to the SEC pretty regularly. As you know, they've been on my show several times. And it seems to me, and this is pure speculation, I don't have any inside information or anything along those lines. But
there is no inside information in Bitcoin.
Yeah. So it seems to me like they've been worn down. I think that they keep putting up defenses as to why they can't have the assets approved. And the more they put up defenses, the more people build more substantial products to answer their issues. If you ask me, I think that the Van Eyck ETF covers most bases, and it's going to be very, very, very difficult for the SEC to not approve the Van Eyck ETF. They've solved all the problems. It's backed by big financial players. It can't be manipulated, or the chances of manipulation are very, very, very small. So I think that the Van Eyck ETF will be approved. I think that one of the 9 ETFs that they recalled the decision for and have set a new deadline sometime in November, I think some of those could actually be approved as well, because
it's actually October 26th, meaning like a week or two.
Yeah. So why would you? As the SEC, why would you make a decision on something, recall the decision, only to give the same decision a month later? It doesn't make sense. And what I get the feeling every time I speak to the SEC is that there is infighting in the SEC, and that from a pure objective legal point of view, the guys who are pro the ETF are winning the battle, because the excuses that the guys that are against Bitcoin have had haven't been justified. The last time they said that the reason why the ETF, the Gemini ETF, wasn't approved was because of the possibility of manipulation in the underlying asset, which is Bitcoin. But the people inside the SEC said that if the same test was applied to gold or silver, still wouldn't pass that test, because those are manipulated markets. And the SEC's mandate is actually only to look at the instrument itself and not the underlying asset. And if you look at the Van Eyck instrument, the Van Eyck instrument really ticks all the boxes. So look, I can't say for sure. I've got a good feeling that the Van Eyck ETF will be approved. If not the Van Eyck ETF within the next 6 months, I can't see the SEC being able to hold it off for much longer.
Right. And the Van Eyck, of course, they are scheduled to decide by December 29th. They could theoretically take it to February. But I agree. And again, if that is approved, that's a major institutional custodial solution that will have been approved, which will open the floodgates, much like the Fidelity. And, the way that I look at it, it's more a political decision. They could say that they're an independent entity. There are monster ramifications for the approval. I mean, it's inevitable because it's going to get done. If not here, it's going to get done in Europe or Japan or Korea. So the pressures, and Wall Street wants it. But it's ultimately the politicians making the final decision are scared of opening the genie bottle. The problem is the genie bottle has already been opened. Now, next, I want to discuss your stance on altcoins, including the top tiers. I mean, you've mentioned some of it before, the lower tiers and ICOs. I mean, I believe that unfairly so, there's a perception that you support all altcoins, which you seem to be, you've already said that's not the case. I just want you, if there's anything further you want to add in general about your current view of the altcoin and ICO markets going forward. And again, you just answered some of it, so just want to see if there's anything more you want to add to that discussion.
So I'm not I'm a very big Bitcoin supporter, but I'm not one of these believers that Bitcoin is the be all and end all and going to solve all the problems around the world. I think Bitcoin has its flaws. I think there are going to be multiple networks, etc., etc. In terms of altcoins, I mean, let's break up the altcoins. So you have Bitcoin, then you have a whole lot of other cryptocurrencies which will have use cases, things like Monero, Zcash, etc., etc. Now, to me, those will all have value, and you're going to see a winner in the privacy space. I'm not discounting the fact that maybe one day Bitcoin will launch its own privacy updates, and then Bitcoin will become the privacy coin. But I don't know if the Bitcoin blockchain is fast enough, even with Lightning, and Lightning is as yet an experiment. We don't know how well it's going to work. And so I have bet behind a whole lot of other platforms or blockchains, which I think may have a chance of succeeding. So those ones I support. I have a website. My website discloses all my holdings except for the holdings which we have in our fund, which we disclose quarterly. And I do that because I know that as a public figure, I could often be accused of pumping and dumping or tweeting, etc., etc. And I don't accept money for tweets. I've never accepted money for tweets. I publish a full code of ethics on my website, cryptomanrun.com, and I publish all my holdings and all my advisory positions. Now, that's it. That brings us to a third category of altcoins. And the third category of altcoins for me is companies or protocols issuing ERC20 tokens or issuing tokens on a blockchain for the purposes of fundraising and the purposes of creating their own network effect within their own network. I'm very, 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 very skeptical about those tokens. Why? Because I believe that model hasn't been thought out yet and hasn't been proven yet. We haven't seen a single utility token actually prove that there is value in the utility token. With that said, I'm very bullish that if we can create a utility token and it is regulated one day, then we may have one of the most powerful financial instruments in the world, which will change the world for much better. And therefore, I'm a big proponent of ethical, honest experimentation in the space. And all investors need to know that if they're going to get into buying ICOs and getting into utility tokens, not only are they investing in the most dangerous, risky asset class that there is out there, which is cryptocurrency today, but they're also investing in the most dangerous part of that, which is this thing called the utility token, which is a token which gives you no rights of voting, no rights to any of the company's profits, etc., etc. Now, I do encourage honest, open experimentation, and there are a lot of good companies that are trying to do this. My litmus test is very simple. One, are you doing this to actually raise money? If the only reason why you're doing a token is to raise money, I'm out. Two, can you do what you need to do using Bitcoin, Ethereum, Litecoin, Zcash, whatever else, Monero? If the answer is yes, I'm not investing in the utility token. Three, is the utility token that you are proposing the only token that can be used in your network? Why I say that is because a lot of companies say, we are creating a utility token that can be used in our network, but you can also use Bitcoin, Litecoin, Ethereum, or US dollars. Then I'm out, because I'm not going to invest in any token where people are allowing dilution of my token value and rights to be diluted by other tokens. Another thing which I've started to look out for, and I've started to become quite a maximalist in this, is to say, if there is a company and a token, then I'm not going to invest. Because very simply, there's always going to be a conflict of interest between the equity holders and the token holders. I will invest in open source protocols where there is a token and the only other economic benefit flows into a foundation, and the purpose of the foundation is to build the ecosystem. So I think, like everyone else in the space, I've been on a huge learning journey in the last year, specifically around utility tokens. And I'm the first to admit that I've made several mistakes investing in utility tokens. A lot of them were because I didn't know what I was doing, just like everyone else. A lot of it was because I got caught up in the hype. And I think that this bear market, if it's done one thing for everyone here, is it sobered everyone up and made us much more critical about what we invest in and given us much more time to do due diligences. I mean, last year, people phoned you and said, do you want to invest in this ICO? You've got 48 hours to send the ETH. You can't do a due diligence in 48 hours. And a lot of us got caught in many bad projects which were never going to be good because we got caught up in the hype.
Well, that's exactly what happened during the dot-com boom.
The dot-com. But now, you know what? But now, you know what? Now I'm happy because I've learned, I've made a lot of mistakes. I'm the first one to admit it. I've invested in a lot of shitcoins. I've even advised some shitcoins. And it's all been a learning curve to get here. And to claim that on the first day that utility tokens launched, I was an expert and a genius, absolutely not. In fact, even today, I'm still learning. I think I'm blessed because I get exposed to many more projects than most other people because I travel around the world all day, every day, and all I do is meet projects all day long, and sometimes I interview them on my show, and sometimes I don't.
Right.
With that said, I'm a big proponent of honest, ethical experimentation in the space, and I warn all investors that if you are going to invest in utility tokens, you need to understand that not only is that the riskiest asset class in the world, but you're also in the riskiest part of the riskiest asset class in the world. And with that in mind, you can expect for 99 out of 100 of your investments to go bad and probably 1 or 2 to go good.
Right. Just like when I started in the mining sector, I was bullish about gold and I owned mining stocks. And in fact, I migrated to junior mining stocks and worked in them, worked for them as well as owned them. And it was the same kind of thing, a learning curve of how risky it is. So that's why I migrated my investments ultimately to bullion. And then when I found Bitcoin, I migrated to Bitcoin. So I am, quote, a maximalist in that from a risk reward standpoint, I don't have the stomach to be investing in these things you're talking about. But some of them will be winners. Most will be losers. Some will be winners. Some will be giant winners, even bigger than Bitcoin on a percentage basis. It's just a matter of, look, I wrote an article a few months ago called Securities, Not Cryptocurrencies, because when people are, quote, maximalists and they say only Bitcoin can exist, I go, no, only Bitcoin can exist as the money of the world if crypto succeeds. But all these other things are going to find, there's going to be niches that are going to work. Some may be utility tokens, which, as you say, is way at the far end of the spectrum. But there's going to be winners in niches. Maybe it's Monero becomes a gigantic winner, or maybe not, or maybe it is a utility token, but it's just very risky investments, some of which will be winners, most of which will be losers. Now, on to the most current FUD topic, which unquestionably is Tether, the cash alternative invented in 2015 by, yes, I'll say it, the shady Hong Kong crypto exchange Bitfenix. Numerous times in the past year, aided by the tireless effort from the anonymous Twitter poster Bitfenix to expose it, investors have speculated that accounting improprieties could cause Tether and perhaps Bitfenix itself to collapse. This past week, such fears have exploded to unprecedented levels, causing Tether to now trade at roughly a 5% discount to its targeted peg to the dollar, and Bitfenix price premiums relative to other exchanges to explode, presumably as Bitfenix investors that currently are experiencing a supposed moratorium or potential moratorium on fiat transfers would rather own crypto than Tether. Whether Bitfenix escapes the current round of speculation and Tether returns to $1 remains to be seen, but clearly there will be ramifications for the entire space if something does go wrong with Tether, which is right now valued at about $2.5 billion, which makes it about 1% of the entire crypto space. So Ran, tell us your current view of the Tether situation in terms of your views of whether it can survive or Bitfenix, and what the impact of new regulated coins like the Gemini and Paxos coins might have on the space in general.
Okay, so I think let's break it up into a few things. The first thing is, I think that what's going on with Tether now is the best thing that could ever happen to cryptocurrency. Why? Because up until now, we've only had one option or one or two options of fiat-backed coins, and those are unfortunately the bridges from the traditional financial world onto the crypto financial world. And we've only had those bridges, and there's been clouds on top of those bridges. So I think the fact that this is all happening now is amazing because it encourages new entrants into the market and new adoption of the new entrants into the market. I think we saw, I think it was Eyck that actually delisted Tether and actually listed a whole lot of other stable coins. So I always say that, you know, that's amazing. We need competitors in the market, because having competitors into the market means that we've got somewhere to go and somewhere to run to, which is safe if Tether is going to go down. Now so that's what I think about what's going on. Now let's look at, do I think, and this is really my personal opinion, not the opinion of CNBC. This is what I think. I would never give any opinions on my show. On my show, I only ask questions. But I'm going to give you my opinion. So Bitfenix is a very, very, very big business, and it has been one of the first and best exchanges in the world. And if you looked in the bull market, Bitfenix was doing one of the most highly traded exchanges in the world was Bitfenix. The Tether, it wouldn't make sense to me that these people who own this exchange and have such a big business would defraud Tether of a couple of $1 million or even a couple of $100 million when they were making so much money. Especially because it's so easy to pick up, to trace the movements of Tether. Everything is on the blockchain. Every single move in Tether is on blockchain. Nothing is off the chain. So to me, it doesn't make sense that people who have so much money and have such a good business and are in such good standing would do something as stupid as defraud the Tether account. With that said, I've tried to get I've met them a few times and spoken to them, but I've tried to get official comment from them. And I find it distasteful, unethical, and I don't even know what other words to use, that they don't come out with official statements other than these shallow, ridiculous statements that their PR company publishes.
Like the one this morning, which said, everything's fine, don't worry. Right?
They keep publishing the fact that everything's fine, which I think is, in my mind, as a crypto person, as someone in the crypto community, I think that's shameful. I think that as people who have profited and benefited so much from crypto and the crypto community, they have a fiduciary duty to the community to clarify what is going on. I personally believe that there's nothing wrong with what's going on. I believe that the accounts may be very complicated, but I don't think that it's been defrauded. And that comes on the back of me interviewing them much earlier this year. They wouldn't let me bring in any cameras, but we had a one-on-one conversation with the people from Bitfenix, who are the owners of Tether, and they explained to me what the issues were at the time. And at the time, I was convinced that there was nothing wrong with Tether. But the fact that they are not much more transparent with the crypto community, to me, says that as a crypto community, we shouldn't support them, because this is a community, and in a community like the crypto community, we have to be transparent with one another. We're all in this together, and I think that they are playing in bad taste. Earlier in the year, I think that there were no ramifications or implications to what they were doing, but I think today there are a whole lot of other exchanges which are as good and even better than Bitfenix, and there are a whole lot of other stable coins which are as good and even better than Tether. So I think, to be honest, I think as much as I don't think anything's wrong with Tether and I don't think it's going to explode, I think these guys are going to get what they deserve.
Yeah, well, you know what? Look, they have a long history, Bitfenix, of mismanagement. The hack, again, the vast majority of people in the space right now don't realize that the Bitfenix hack in August of 2016 was second only to Mt. Gox. I mean, it was horrifying, the amount that was lost.
but they repaid everyone else through the recovery right token. So everyone's been repaid.
Yes. I mean, but I'm saying they were fortunate that the space exploded so that they can make the money to pay people back. But people do remember that, and as a result, they are clearly having trouble getting banking relationships. And the reason we have this FUD now is because Noble Bank, which is this bank in Puerto Rico that has been their banking partner, is going bankrupt. So people are assuming that something is wrong with Tether, even though there's, as you say, there's no smoking gun. People are speculating, and they may be fine, and they may come out today and say, yeah, we have a new banking partner, everything's fine, and in fact, we'll get audited. But again, like you say, this information is not there from a company that has had issues in the past, and as a result, people are scared of it. And as you say, there's all of a sudden all these regulated stable coins like Gemini, Paxos, Circle, and there are going to be many others. And look, if there is an ETF approved, then all of a sudden the whole custodial solutions and stable coins, everything will be regulated. And it's just a market share issue with Bitfenix. So
yeah, I think again, I think that what's going to happen is that these guys are going to people are going to move to all the other stable coins. They're going to do this very quickly. And I think that the founders of the other stable coins like True USD, Paxos, MakerDAO, all the other coins can thank. They should write a letter of thank you to the founders of Bitfenix, and just thank them for being for being the marketing department for all the other stable coins.
Yeah, and the same could be said to finish the thought for Bitmain. I mean, Bitmain has done some really bad things. Some of them unethical, some just bad business decisions, but they were a pioneering company which helped build the space, and now they are being, kind of taken. A lot of their market share is being taken by the natural course of events. Now, lastly, I want to ask the crystal ball question that no one is capable of properly answering, but knowledgeable Bitcoiners have keen insight into that could prove valuable to the community, which is, Ran, your big picture view of the issues most likely to impact the crypto space in 2019, both positive and negatively. Yeah, generally speaking, take it away. What do you think is going to be going on in the next 12 to 18 months?
Okay, so look, I've got 1 minute left because I've got to go. I've got another interview which I've got to be doing. But I think that the positives are institutional money coming into the space. I think the bridges have been built, the foundations are there, the institutions are coming in. I think the ETF will help us quite a bit. That doesn't really excite me, to be honest. I'm looking for mass adoption. And what's going to excite me is when someone can say to me, we've got 250 million wallets out, and people are using 250 million wallets every day, and they don't even know that they're using Bitcoin or crypto. So yeah, all this nonsense of ETF and bridges, yeah, it's cool. This is going to get the price up. That's amazing. But I'm looking at it differently. I want to see mass adoption. I'm focusing my time, effort, energy on working on projects that will drive mass adoption on crypto, and specifically where they needed it. And you want to know what's going to power the space is an announcement that someone says, I've got a user base of 250 million people, and they're all using crypto, and they don't know about it. Andy, apologies, I have to rush because I've got another live interview which starts in about a minute. So thanks very much for having me on your show, man.
Absolutely, it was great. And everyone should follow Ran at CryptoManRan, and also watch CryptoTrader.com, which you can find on the internet. As for me, you can find me at Andy_Hoffman_CG or CryptoGoldCentral.com. Thanks very much. Thank you so much, Ran, and have a great crypto day.
Thank you, Andy. Thank you very much, man. Thanks for having me on your show.